Good morning. It's Wednesday, the 18th of December, and this is Govindraj Ethiraj, headquartered and broadcasting, as well as streaming from Mumbai, India's financial capital. The top stories and themes for the day: there is no take for now. The markets are in steep fall on US interest rate fears. The rupee hits a fresh low as oil prices slide. The Reliance stock is now in negative territory for 2024. Data center investments could cross $100 billion by 2027 in India, that is, and what's driving it. And why GenAI embedded smartphones are yet to catch fancy as was projected until recently, and overall trends in manufacturing.
This is the Counterpoint with Govindraj Ethiraj.
The markets see a steep fall. Foreign institutional investors are selling again after appearing to have consistently bought in the first few weeks of December. One reason being offered is India's widening trade deficit, numbers of which were revealed yesterday and showed that trade deficit had hit a record $38 billion. This was also helped by record gold imports at close to $15 billion, which is unlikely to continue surely at this pace into December, that's this month. Nevertheless, the stock markets are also expecting that the US Federal Reserve will limit its rate cuts in anticipation of higher inflation under the incoming Donald Trump administration. So why is there going to be higher inflation? Well, that's because, among other things, Trump has promised to raise import tariffs, which in turn will raise prices of products across the board. Back home, the BSE Sensex and NSE Nifty were down about 1% each. The 30-stock Sensex fell about 1,064 points to end at 80,684, while the NSE Nifty 50 was down 332 points to close at 24,336. The broader markets behaved similarly, with the Nifty Mid-Cap 100 and the Nifty Small-Cap 100 also ending lower by about 0.6% each, approximately. So the markets are still holding out for a Santa rally, which will most likely be driven by local factors, if so, as the prospects of a larger foreign portfolio investor-driven rally seem to have receded somewhat. The good news, on the other hand, is that Christmas is still a few days away. Reliance takes a turn. In all the news of the market, sometimes the big stock stories get missed out, and moreover, not everyone, for various reasons, report on them. The Economic Times is reporting that Reliance Industries stock is on track to end the year with negative returns. This marks the first time in nearly a decade that the Mukesh Ambani-led company has experienced such a decline, the ET says. Its market capitalization has dropped by over 440,000 crores or 4.4 lakh crores since its peak in July, with shares falling nearly 21% from their highest point of 1,608. That's also been driving down the markets on several days, including yesterday. From 2022, Reliance's returns have been falling, and this year will be the turning point as it goes, or rather slips, into the negative, thanks also to slowing earnings. Historically, Reliance's growth has been driven by capital expenditure in refining and chemicals or margin cycles, says the Economic Times. But Reliance Retail and Telecom now account for about 50% of the company's earnings before interest, tax and depreciation, and are expected to drive all such growth, that's earnings before interest, tax and depreciation growth, in the next 3 years. So the ET says that analysts have grown more cautious, and that's something we can see elsewhere, citing slower growth, rising real estate costs, and the capital expenditure needed to sustain expansion, particularly in retail. Analysts have also pointed out, including those the core has spoken to, that the rapid rise of quick commerce company has added pressure on revenues and margins, particularly in retail once again. ET says Reliance Retail has had to close about 1,185 stores and also grapple with sluggish revenue growth despite increasing foot traffic. So I cannot vouch for the number specifically, but it is clear that they've been shutting stores across categories of retail over the last year. Recent figures I could find show Reliance Retail at about 19,000 stores, including electronics. So store closures are also part of normal churn, and the number may sound high, but may not be that high in relative terms. So the problem is elsewhere. So could Reliance Retail's problems be linked to competition from quick commerce? Possibly, but that can't be the only reason. The other likelihood is obviously slowing demand, to the extent that Reliance's fortunes are affected by it, as are the rest of the economy. And that is quite likely putting pressure on the stock, which is not so easily reversible, at least until the broader economy or consumption improves. Rupee at another low. The Indian rupee hit a fresh lifetime low on Tuesday thanks to concerns over that record trade deficit and fresh selling by foreign institutional investors. The rupee hit a low of 84 rupees 93 paise against the US dollar before closing at 84 rupees 89 paise, down very marginally for the day, according to Reuters. Foreign banks were seen bidding for dollars, likely on behalf of custodial clients, while the Reserve Bank of India likely intervened via state-run banks to keep a lid on the rupee's decline, traders told Reuters. A trader also said that the wider trade deficit has reinforced the upward bias on dollar rupee, and the rise above 85 rupees now seems likely in the next few sessions. Oil prices slip again. Oil edged lower for another day after Chinese economic data failed to dispel concerns about slowing consumption in that country. China is the world's largest crude importer, and Chinese data has been moving, even if partially or marginally, crude oil prices in recent times. Brent was trading near $73 a barrel, following a small, less than 1% drop in the previous session. Crude has now fallen by about 14% this half of the year on concerns over the outlook for next year. Both supply and demand are precariously positioned in some ways. Supply could increase and demand could shrink further, which means prices could drop. And that, of course, is good news for countries like India. India's data center demand. A strong demand for data centers across India will lead to investments crossing the $100 billion mark in 3 years' time, according to a new report by commercial real estate services and consulting firm CBRE. The last 5 years, through COVID, have already seen investments worth about $60 billion come in. The states of Maharashtra and Tamil Nadu have emerged as the most preferred destinations, with Mumbai alone representing about 49% of total investments. Mumbai is followed by Chennai, Delhi, NCR, and Bangalore. Together, they constituted about 90% of the country's data center stock in the Jan to September 24 period, says CBRE. The key reasons for Mumbai and Chennai's dominance is overall infrastructure, but also extends to the fact that there are cable landing stations in these cities or around these cities, and more on that shortly. India's data center stock stood at about 1,255 megawatts and is projected to grow to around 1,600 megawatts by the end of the year. In 2025, an additional 475 megawatt of capacity is under construction, with Mumbai and Chennai expected to lead the supply additions. The term megawatt used in the context of data centers obviously refers to electricity consumption. Like data centers, overall commercial real estate is also being driven by the expansion of global capability centers or captive centers for multinationals, mostly for technology and research functions. I reached out to Anshuman magazine, CBRE chairman and CEO for India and Southeast Asia, and I began by asking him what was driving the surge in investments in data centers, CBRE's own positions in that area, and how he was seeing overall trends for commercial real estate into 2025.
Even while our research team was working on this 100 billion seemed like a big number, but it is going to happen because we are still far behind. If you look at India, can you imagine amount of data which would be consumed every day? Thanks to internet penetration, thanks to all the digitization. I give examples to people that outside India, that in India, sometimes some people may only get one meal a day, but they have a mobile phone, And the amount of data they consume, of course, that's not an exaggeration, but what I mean to say that, the whole mobile penetration is so large. And there's a lot of, and artificial intelligence is also accelerating all the data mining, anything to do with data, And that has led to data centers coming up. And that's why we feel there'll be more investment, and also government legislation. Government has really supported the data center industry. And as you know, most governments globally now are bringing legislation where they want the data of that country to remain in the country itself, which means in the past, you would have cloud storages beyond geographies, local geographies. That's not going to happen as much. And when you have to then keep data within the country, with all the data being generated across, will mean that there's more data centers required. And this is the same case with India. And we will see, this progressing quite a bit. And 2027 is just 3 years away, at least for anywhere, but even for India, with our relatively low base and where we come from, this is a big, big move.
Right. So There are three kinds of areas that are of interest. So one is from an occupier point of view, the second is from an operator's point of view, and third is investor. So we're, I guess, seeing activity at all levels right now. But it's also seems to be the case that a lot of the data center investment is happening in a few places, and Mumbai leads the country with almost 49% of data center capacity. So what are the factors that's driving it to one? I mean, it seems like power or visibility of power supply and so on are the main driving factors, or is it something else?
Before that, if you look at Mumbai and then Chennai are the two major areas of activity for data centers, is also because of fiber connectivity, undersea cables, which are coming in. So that is the number one reason. Then, of course, one of the challenges with data centers is that they requires a lot of power and the quality of power. And although in India, as you know, power situation has improved significantly, yet many places, the kind of power data centers require, it becomes challenging for some of the cities or states to provide that. Then also you need water, right? Because they need to cool water, etc. And that's why, it has taken some time because, it is capital intensive, that the number of people who can invest also are kind of relatively limited. But the reason to answer your question is because of that. And it's so Mumbai and then Chennai, both are coastal cities.
Right. When you talk to people who, let's say, want to invest in this space, and firstly, are you seeing a lot of those? And secondly, what are they looking for in terms of the kind of areas they want to invest in within data centers? And is it as lucrative as it seems, or will it continue to remain as lucrative as it seems today?
It will, first of all, yes, it will remain lucrative, but this is really meant for large investors. And most of the data center investors are institutional investors because the ticket size, like I said, these are capital intensive projects. So it would be mostly large institutions will be putting money. The next few years, it will be lucrative because again, when any investment has large requirements of capital, one end, of course, is a risk. The flip side is your competition is less also, right? Because everybody can't deploy that kind of money. So it will, and the demand is quite high. So it will remain lucrative.
If you were to look at the broader commercial real estate segment and the investments coming in, how are you seeing trends as we go to the end of 2024 and into 2025?
The trend is really beyond my expectations also. We knew that the office market is doing well in India. But even if you look at last year, the absorption in India, the top 10 cities was about 64.8 million, almost 65 million square feet last year. And although there are a couple of weeks left before end of the year, and a lot of, we only get to know the final number, early January or sometime late in January. So not early because all the transactions being completed just to get the whole thing done. But we're expecting that this year, that number will be surpassed. And if you had asked me beginning of 24, already there was a jump like in 23, that number was the highest number ever when I said almost 65 million square feet. And I knew the market is going to sustain mostly, but wasn't sure that we will cross it this year. So that has happened. And as of today, where we stand, 25 is expected to at least sustain that momentum. So the office market India's office market would be one of the best in the world right now. Just the volume of space take up. And especially for the size of our country, I'm not talking the population, size of our real estate market, size of our economy. For that, we would be one of the highest in the world. Of course, US is a much larger real estate market. So I'm not coming to America. But leaving America aside, if you look at APAC, you look at most of Europe, India would be one of the top markets for office space in the world.
Right. And if I were to try and link that to data centers, would you say that data center growth is driven by growth in IT and IT linked consumption, that is data? Or is it also to do with let's say, how people like the big tech companies or the users of data are expanding their own presence in India?
If you look at all the top tech companies in India, they are expanding. Now, we were talking about office earlier, what is driving that office growth right now are, of course, that India is an well-established offshore outsourcing center for the world. Besides all the software development, what happens, and all technology, etc., it is a tech hub of the world. It's really the GCCs, the global capability centers, which are expanding. because they have a track record of several years where they have proven the positive impact on the global balance sheets of these corporates by offshoring to India. So they are now expanding even more. So that all the top tech firms, all the GCCs, all the other business process outsourcing companies are, of course, their data is also ballooning. And that is having a direct impact on data centers. Besides, like you rightly said, the consumer data and whatever else is happening in the country.
Last question. So, how are any big 2025 trends that you're seeing, Anshuman?
Well, I would be happy. More than a trend is that if our office demand sustains for next year, that itself will be great for it'll be a great reflection of the economy, but also for the real estate sector. Residential, which is the largest part of the real estate market, has done well. We have to see, will that sustain? Because in certain markets, the prices have gone up significantly. The market, the sales have been very good. I expect, at least in most markets, the residential market will kind of sustain to better depending on which geography, because the market trends are different. There are certain markets, like I mentioned, the prices have gone up too high. In others, it has been a reasonable increase. So if the residential sustains next year, which it is expected to so far, because the interest rates are not gone up. Now, there's also a lot of things at play. If this whole, as you know, the whole global discussion right now is how to reduce interest and how keep inflation under control. So if there is interest rate movement downwards, that will have an positive impact on the residential market and overall business. So in 25, there will be more activity. So besides, I'm just thinking, you asked me the trends. For me, those sustaining the growth should be the big, what you call, objective. But also we will see activity in healthcare, in education sector, in senior living, student housing. During COVID, especially the student housing and the senior living impacted quite a bit. And I do expect that to start reviving as we go forward.
Supplement to the last question. So, what's the most exciting market in India in 2025 likely to be?
Very difficult to put in. Hyderabad certainly stands out in the last couple of years because Hyderabad really shot up. It used to be good old days, Mumbai number one, NCR and Bangalore. Then Bangalore became number two. Then Mumbai became so beyond these three markets, Hyderabad certainly shot up. So, after Bangalore, which is the number one office market, Hyderabad became number two, not NCR, not Mumbai. So I think Hyderabad stands out, although it has seen a lot of growth. We'll have to see what will happen. Can it sustain? Pune is another market which has seen good activity. And really, besides these two, of course, there's Chennai, there's Calcutta, there are many cities. But the larger part of real estate, and as you know, our economy the game would be in Mumbai and larger Mumbai area, NCR and Bangalore. They still remain the places where the most activity will still continue.
Right, Anshuman, thank you so much for joining me.
Thank you. Thank you for having me.
Gen AI in phones. Many smartphone makers were and are embedding Gen AI into their phones as a way to bring in new buyers and to make phones more attractive. Now, this was also seen as a key trend earlier this year as AI-linked applications started appearing on phones, for instance, around photographs and imaging. In April, Counterpoint research had said that Gen AI smartphone share of overall smartphone shipments would reach about 11% by 2024, that's this year, and 43% by 2027, adding that these estimates were higher than their own estimates forecast in December 23, with the anticipated entry of Apple into that segment. Also, Gen AI-enabled smartphones are projected to cross 730 million units by 2028, more than triple the estimated volume for 2024, if that gives you a sense. But the overall pickup has not been as much as expected or anticipated. Tarun, Pathak, research director of Counterpoint Research, told me. I reached out to him to ask him about the Gen AI trends that he was seeing on mobile devices and, more importantly or interestingly, the overall trends he was seeing into 2025 in telecom manufacturing as well as on the device side.
We did this survey on the Gen AI thing. So we believe that only 1/3 of the respondents were aware of the Gen AI as a service. So in terms of awareness is still growing. But I think the key thing here is use cases. We believe that this is something that is still in the works. And if you look at it from that perspective, we believe this is going to disrupt for sure. But when and how, that it will define. So I think the way we look at it is Right now, a lot of things are happening very gradually in that certain landscape, like OEMs are working in their direction. But then when it comes to disruption, it will suddenly disrupt when you have a killer app or use cases coming into picture. So I think so there are two things to it. One, from where the industry is looking at it, which is more of your, let's say, starting from the players like Google or Meta or Nvidia, or even at the certain developers who are working alongside with them. And then you have the mediums, what we call as players like OEMs, that are actually looking into how we can basically bring those things to the end consumer. So if you look at the entire AI ecosystem, it starts with your services and applications, then it goes into enterprise domain specific, very proprietary AI models. Then you have those training and code and hubs which basically train those models, foundational models. And then on top of it, like, you have those data sets that are building on top of it. Then the other thing is what you do with those data sets and everything. Obviously, you do this computing on the cloud and server infrastructure. Then obviously you had these semiconductor companies coming into picture, Qualcomm, MediaTek, because they're building chips that are powerful enough to run these models on the devices. And then obviously you have foundry kind of equipment, IP tools, entire value chain. You have the semi infra companies. Then you have cloud platforms, you have models and frameworks, and you have AI apps. So the biggest value right now, I think, it is more on the infra and semiconductor side of things. That is where you will see a lot of action happening. You're seeing like what has happened with Nvidia, a success story. So that is one. Like, if it is a 200 and $250 billion opportunity, 150 lies in that particular infra semi. But then there is another end of it, which is the consumer side of it. There are not a lot of use cases, practical use cases we have seen, which consumers are saying, okay, here, this is something we are really looking forward to. And that's the gap that will be bridged in the next 1 to 2 years. We have seen certain positives as well, because the survey we have released on our Gen AI report, it, although it was showing only third of respondents are aware of Gen AI, but half of the respondents who actually said they are aware, they said we are quite familiar with the Gen AI, with the Gen Z leading in that familiarity thing. And if you look at from the aware users, 73% of the respondents actually tried Gen AI applications on the phone. And what they believe is 66% of them believe that on device Gen AI will be super helpful for them from privacy and security perspective. And then what they are saying is, in terms of use cases right now, these writing assistants, AI writing, those kind of things are currently very helpful to them. They are summarizing text. But then there will be a lot of use cases that will be more like, let's say, image generation or photography, computational, AI agentic. I think the biggest trend for the next year will be on AI agents, how those AI agents will change the entire smartphone experience and completely change it. Because right now, until now, we believe that we used to adapt to the smartphones, like, in a sense, from the personalization perspective. The smartphones of the future will be even more personalized going forward.
Is there one example before we go that you feel will see in our hands literally in the next few months of what you're saying, the personalization and AI?
Yeah, definitely. So think of it as like, I am out, like, for example, on my phone, there's an app, and I am actually navigating certain things of my smart homes through apps on my phone. But even with me opening my phone, they will sense that I am approaching towards my home. They will switch on the lights. They will make sure, like, if it is obviously during summer season, they'll switch on the AC if it is connected, and I do not need to do anything. So, for example, another example is developers. Let's say, take an example of Uber. It's now it's already 9 o'clock, and every 9 o'clock, Monday to Friday, I book a Uber from same place to my office. It will not even ask me, it will just give a prompt that seems like the time is here, would you like to need to book an Uber to your office? I'll just say yes, and it's done. So those kind of prompts, those kind of things, we believe likely to happen. And that
and it'll be driven by the mobile phone.
Exactly. Mobile maybe because we do not see that interface going away unless until you have a complete disruption happening in terms of your input mechanism, which is like, let's say, XR or metaverse that can potentially replace, but we still couple of decades away from that adoption.
So, as we head towards the end of 2024 and 2025 promises a lot of geopolitical shifts, what does that mean for the telecom manufacturing industry and specifically smartphones?
I think as we end the year, there have been a lot of learnings like what has happened. We had eventually seen like this buzzword, which is like AI, that is now shifting into reality because we have seen the adoption in certain things. But at the same time, I believe the key area for 2024, the key topic has been these geopolitical tensions that we have started like a couple of years back with China and US being in the middle. What we believe that these not only the tensions but this kind of cooperation will play a very important role in the democratization of technology going forward, because we are entering a decade where everything will be connected, and things that needs to be connected is basically what we call them as semiconductor. There's a chip that goes into everything, right? From And now what we are seeing happening is these advanced countries, they're looking to localize some of these manufacturing facilities or manufacturing landscape in their own nation. So that is where you might have seen those partnerships that are happening or the announcements from some of the companies expanding their facilities beyond their home nation. So we have seen that happening in Taiwan, and also TSMC announcing beyond Taiwan, expanding into US, different countries. We have seen a lot of these nations also announcing subsidies or even these benefits for the growth of the semiconductor ecosystem, which is again very important because if you have to localize something, you need to have some kind of activity in terms of manufacturing happening in that country. You want to make sure that you control the IP and everything. So I think that sets such a very important 2025 for us because there has been a shift in powers as well. We have seen a new government coming into in US with President Trump coming into picture, and he has been quite vocal on a lot of these things, especially with the tariffs, and obviously a very key eye on keeping the key technologies close to their heart and make sure that the entire IP stays within that. So we believe the next couple of decades, all these countries will play a very crucial role and keep a very closer eye on how to develop that leading tech that will connect everything going forward. We will be like ending a billion of devices that will be connected, and people will be sharing a lot of their personal information on top of it. So that brings us to a very very exciting chapter of this technology landscape across different nations, across different geographies, across key segments, right from chip to cloud. Everything will be super important to keep an eye on where the supply chain is moving.
Right. So, specifically in iPhone production in India is going up. Many of the parts for those iPhones come from China. The US is likely to increase tariffs on China. It's going to put tariffs on India as well, as it has promised at this point, and on other countries. The tariffs on China would be much higher. So, what is all this adding up to, and how will this change the dynamics of smartphone making?
So first of all, there are two things. One is manufacturing, and then another thing is assembly, right? So these are two different things. So what we believe that even the assembly kind of things will expand gradually across the globe. China used to control a lot of it, and we believe that sort of it is letting it go in a sense, because now you can see phones being assembled in countries like Indonesia, even in countries like Bangladesh, Pakistan, Latin America, India. So that is one. The second thing is the localization of the components. And I believe that is where the difference lies. For example, for India, I think it will be interesting. Like the numbers is one part, how many iPhones are being assembled, produced in India. That is obviously good for the trade, reducing the your import bill. But at the same time, we need to see how much of those components that goes into these devices are being sourced locally. And that is where we still feel China has an edge. And for that ecosystem to develop in certain, and not all countries will be able to do it. We believe India has an advantage Another country I can look into is Vietnam, that will be competing very closely in terms of their policies. And that is why you can see these programs like India Semiconductor Mission and what we have seen. There are a lot of focus on the fads, a lot of focus on like how to scale the entire semiconductor ecosystem in India and making sure the companies come here and invest, because you will be driving that the local value addition push if you attract this company. So that is where I think the larger eyes will be on, rather than pure assembly of the devices that is just of 5% value addition.
So therefore, we don't know what's going to happen, let's say, in 2 months' time. And we are better off planning for the medium to long term in terms of manufacturing capacity and so on.
Exactly. That is what, like, if the tariffs increase, one is like we believe that India still is in a great position because we do have facilities that we have started in 2014 with Make in India, then PMP, phase manufacturing program, then PLI, production linked incentives. So we have actually done quite well in terms of expanding that ecosystem. And if that thing happens, India should be in a good position in terms of localizing some of the operations here in India and export it to other countries.
Tarun, thank you so much for joining me.
Yeah, thank you. Thanks a lot.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.